so much anger about the housing problem in Canada as well in other parts of Western economies, particularly in Europe. And I thought maybe I should cover the reasons behind it and how this was started back in 80s. So I think all of us who are actually seeing this as a crisis, a problem, we should also understand the reasons behind this whole system and how this is actually built to rig you forever. Okay, so let's talk about it. So after Second World War, when the Europe was pretty much destroyed and they lost 20% of their population, those people who returned to their homes, the governments in the European countries, they owed the responsibility to provide them the housing, the healthcare, the social, welfare system. And this was the birth of the entire socialist program across Europe, when the governments actually provided the social housing, the birth of NHS in the UK as well as across the Europe, and the overall benefit system that we see today are being used and misused for various reasons. So the people who actually were living in those social housing were actually the tenants, right? So they did not own those properties. It was a property owned by the government, given to the people living in as tenants. The tenants were paying subsidized rent. Fast forward to 80s when Margaret Thatcher came into the power, and she said, okay, how can we bring them into financial system? Right now they are not. Okay, so one idea is if we can sell them the concept of home ownership, that way we can let them buy these properties at a heavily discounted rate, and we will basically offer them the idea of home ownership. And this is how this was sold to them, and those renters became debtors. Okay, so the banks came into the scene and they started creating those mortgage products, which was sold to those quote-unquote homeowners to actually become the debtors of those properties. So this was the birth of the financialization of the shelter, right? So the real estate, the home, became an asset that was being financialized from that point onwards until this day. This whole system has been going on. The banks were actually making money. So banks are the true beneficiary of this whole system when they started financializing those assets. Those assets were designed to appreciate in prices, because otherwise, why would somebody buy a property and financialize it using a 30 years old mortgage? So the system was built in a way it needs continuous influx of new borrowers because it was perceived to be a store of value. The trends were showing that the property value will always appreciate. So you just have to get a job, buy a home, get a mortgage, pay off the mortgage throughout your entire life. And you basically create an asset that will be used as a collateral or transfer of wealth to your kids when you retire, when you die. So that was the whole concept of financializing of shelter into a real estate. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today. So till this day, this is going on, right? So the system is actually built by design to have this whole thing going on, okay? The system needs new borrowers all the time, and those new borrowers need to borrow money from the banks, have to pay interest on top of the principal over the period of, let's say, 30, 35 years, 40 years, and the banks needs to make money all the time. In order for that system to sustain and continue going on, it needs continuous flux of new borrowers. One of the major reasons why we need immigrants in all the European countries is to sustain the debt-based economy. And real estate is a major part of it. So that's going on. And this is a necessary investment decision that everybody has to make, because that's part of the process, that's part of the game. That whenever you grow up, you find a job, you get mortgage, You buy property, you live in the property for the entire life, pay off the mortgage, and then pass it on to your generations. Now, we are approaching to a point where this becomes practically impossible to purchase a property, especially in Canada, on a single income, unless you have both partners working at least above $100,000 a year. Then you should be able to qualify for, let's say, a $1 million property. Otherwise, very difficult for anyone to qualify for that unless they get a massive help from their parents. So I thought just give you a quick history lesson in terms of how this was all started and how this is actually designed to work like this. Okay, so when you are angry about this housing crisis, you should know this was all designed by the government and the banks, and the true intention for that is actually to financialize the shelter, which has been going on since 80s till this day. And if you want to change that, it's not easy, because then the whole house of cards has to collapse. Banks have to write off billions of dollars of mortgages. The people who own those properties will actually have to go bankrupt. So this system has to somehow continue work. Otherwise, it's going to be a big disaster economically, socially, and nobody wants to do that. So I think this is the reality. Even the prices pulls back a little bit, it will then bounce back again over the next 10 years, for example. And in a system where the currency is being depreciated continuously, because it's a debt-based system, the debt has to grow. I'm sorry, I am not seeing any reason why the property market will crash. There will be some pullbacks, okay? There will be some sideways movement, but I don't see the property market will crash back down to 2010 or 2012 or 2014 levels. Again, everything is possible. There will be pullbacks, there will be sideways movements, but I don't see a bull market for sure. But I also don't see a major crash coming. As long as the government wants to continue pushing the system, the banks want to continue pushing the system, it's going to continue work like this. Happy to be corrected. Put your comments down below. Let me know what you think about that. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. When it comes to investing, staying informed is everything. That's why I've been diving into Moomoo. It's got some tools that are pretty useful for navigating today's market. For example, Moomoo gives you free access to real-time level 2 market data, advanced charting tools, and professional-grade research. The kind of stuff that you usually pay extra for on another platforms like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Moomoo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with. Thank you, Moomoo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply.